Australian trade data is out and it's a mixed bag for Down Under, as the trade balance narrowed and exports remain unchanged from a month previously. Cara Ordway of City Index joins me now. Cara, imports have recorded a decline today as mining companies curtail investment. It's thought that following a small lag, this fade is likely to be offset by a pickup in investment outside of mining. However, with RBA Governor Glenn Stevens expressing skepticism about the economy's post-election confidence, could this lag in pickup prove to be a long-term wait?
Yes, I definitely think this is likely to be a long-term wait. There'll be more of a focus on the emerging market region and the Asia region as a whole in terms of this pickup. Definitely the jury is still out in terms of whether business confidence will remain post this election, and certainly if you look at public spending forecasts, they're not looking likely to help that much in that case. But really this drop in imports is always going to be the case when we see the big drops that we're seeing in the local currency, so a weaker currency in terms of buying things overseas, really down from that 106 that we saw in April down to the lows that we're seeing traded at the moment, down right to the 93. So still very much a developing story in terms of the trade balance, and there's likely to be other forces that come into play, as I said, focus on the emerging markets and the Asian region as a whole. But I really think we need to focus on the positives from that number. Exports looking to remain stable over the short-term future, and the focus on the investment coming in from overseas. I think really what we need to focus on was what Glenn Stevens said in his past speech, saying non-mining investment was likely to pick up to at least high single-digit rates within the next couple of years. So that'll be a good thing for the domestic economy, certainly as there has been a focus on that mining sector, and that's thought to decline by around 3% relative to GDP over the coming years. So yes, very much a focus on outside that mining investment, and hopefully we can see a pickup, albeit delayed, in the longer term.
Aussie dollar US dollar has shifted moderately higher off the back of today's trade data, but still remains down following Tuesday's RBA decision. How do you see current sentiment for the commodity currency playing out?
Look, we seem to be gravitating towards the 95 mark at the moment, and that is really because that is a heavily traded strike among options traders, and we're really seeing a range traded over the past couple of sessions. Certainly, as I said, there will be more of a focus on the Asian region for the RBA, but really, in terms of Australian dollar expectations, really, there's no kidding ourselves when it comes to where we think it's going to go over the next couple of months to the medium term, and that is going to be a focus on tapering and what the Fed are likely to do. We know there has been some speculation that maybe that might be December, but really traders still very much focused on March 2014 for when that tapering will occur. Really, the speculation on where the Australian dollar will go in the short term will depend on those US numbers, including that non-farm payroll number that we have out this week, and that will really create a lot of the speculation that we see in that Aussie dollar market. To the downside, certainly there has been some pressure. As I said, there's some support around this 95 level, and there has been some risk boost over the past couple of days, but yes, very much focused on a choppy market going into those non-farm payroll numbers as to where the Australian dollar will go in the short term.
The RBA has previously cited an improved sentiment in housing and business as supportive of its no-change policy. However, with tomorrow's unemployment data expected to show a rise, is this likely to provide an indicator as to when the central bank's next interest rate move might be? What are you forecasting here?
Certainly, hopefully it will give us some indication as to what they're thinking about the general health of the employment in the local economy. And certainly, as you said, there is the threat of this asset bubble within the domestic economy, and that may promote a more hawkish tone for the coming months from the RBA, certainly to cool the housing prices that are seen to be rocketing at the moment. And really, I think among traders there seems to be the general feeling that they are moving away from this easing cycle now. They haven't cut since August, and really there's more of a focus on what the Fed are going to do in terms of tapering. We know really that one of their biggest complaints is that the Australian dollar is too high, and that's been hurting the local economy. Now, Glenn Stevens has said this week that there is still very much a focus, as I said, on the Fed, and they have to really put that reliance on that tapering to bring that Australian dollar down, and that is inevitable, whether it be in December, whether it be in March next year. This tapering will have to occur, and that is likely to bring down the Australian dollar and increase demand and growth in this local economy on the back of that lower Australian dollar. But certainly, as I've said before, there will be a focus from the RBA going forward on these Asian markets, on the emerging markets, as this cheap money is withdrawn from global markets. And really going back to unemployment, it is set to rise to around the 6% mark in early 2014. So that expectation of a higher number is already there, and really, a focus on these Asian markets once we consolidate going into 2014.
Conversely, New Zealand have today reported a surprise fall in unemployment, with the joblessness rate dropping to 6.2%. The Kiwi dollar has been much discussed this week. How is this cross looking? And similarly, how does this play out for talks of a Moody's downgrade for New Zealand?
Yes, certainly there were very strong numbers today, although it was announced at 6.2%. Really, the focus was on that participation rate from September that rose to 68.6% from 68.1% from the previous quarter. And really, if we hadn't had that participation rate, that unemployment level would have been a lot lower than 6.2% that we saw announced today. So very strong numbers. The Kiwi has been a favourite amongst many of the traders going into this week. And that 83.70 that we're seeing traded at the moment looks fairly stable. What we'll be looking for in terms of that cross is an 84.37 close. When we get that above that level, certainly we'll be looking further to the upside towards the 86.30s in terms of the Kiwi dollar. But I really think you can see the differences in what we're seeing in this region as we go. If I go back to those unemployment numbers in Australia looking to go up and the Kiwi ones looking to go down. Really, there's a massive Aussie-Kiwi play out there at the moment among traders. We have seen declines in that rate. There's a very much bearish trade going on at the moment, down from those 115s that we saw traded down to the 113.50s at the moment. But certainly the expectation is looking towards what we were seeing traded in the beginning of October, which was the 112s, and a focus on really what the Kiwi economy is doing in terms of their house prices and their inflation data, because that will be the key going into 2014, with many traders expecting some rate hikes from the RBNZ in terms of restricting that growth in terms of the housing market, because at the moment all they have in place is those mortgage restrictions, and really that inflation rate and those housing prices are going to have something else, going to need something else to restrict them going into the end of 2014.
Cara, thanks so much for your insight. The Dukascopy TV team will be bringing you exclusive interviews across the board today, so don't go away. Goodbye for now.